Good evening, everyone, or good morning, depending on when you are watching this video. The stock market had a pretty decent do-nothing session on Monday. I am personally happy overall with the session, as I would like to see this happen for the rest of the week and then see us break out rather than us go ahead and just have broken out today to new highs and or tomorrow to new highs. If we do break out tomorrow to new highs, it will be fine with me as we are heavily long. However, I would find it way more constructive is if we could have today's action for the next 4 more sessions and then possibly break out higher. That would create a lot more um, formed base consolidation patterns for stocks to break out of. But overall, a good day overall. NASDAQ up 0.13%, volume lower than the day before. Overall, it was a do-nothing consolidation day. New York Stock Exchange, as you can see, flat with lower volume. S&P 500 down the inverse 0.03%, lower volume. Overall, excellent tone today's session. Dow Jones Industrial Average down 0.06%, and the Russell 2000 leading the way higher with a 0.51% gain. As you can see with the relative strength line, that white line at the bottom of the screen is doing really well overall during this pullback. So today was a good day. We didn't have any covers. We didn't have any partial covers. We didn't have any sells. We didn't have any partial sells. So it was a great day on that end also. So nothing really negative to look at. The only really negative stock out there that I did not like see break down was Geospace Technologies. Still, that is just one massive breakdown. I mean, I guess MXIM was also in my top quality stocks, AAII quality stock scans, and that was also breaking down. But besides MXIM and GEOS, it was a pretty solid day. And then when you take on top of that, which way do you think that this market's going to break out? I always want to let everyone know that follow the IPOs, your initial public offerings. How are new issues acting in this market? And let's take a look at MKTO, finding excellent support today near those lows that it just set on its open whenever it first started trade, and then that recent pullback 2 sessions ago. Look at data breaking out today. Look at AMBA breaking out today. Look at QLYS breaking out today. MODN breaking out today, HAWK breaking out today, AMBI breaking out today. When you see IPOs acting like that, you know that chances more often than not are going to dictate that the market's going to break out higher. And on top of that, the solar industry, is looking very hot now, and this industry could easily lead us higher. Look at JKS, look at HSOL today. Before I go to the leaders, let's look at some more of the smaller ones. CSIQ breaking out, LEDS breaking out, YGE bouncing off recent support, LDK bouncing off recent support, First Solar breaking out with a pocket pivot point buy signal, SPWR breaking out. So you got IPOs looking good, and you got solar stocks looking good, and overall that's a good sign. And on that note, with all those solar stocks looking good, since the two leaders, FSLR and SPWR, are not perfect with today's signal because they're both moving on below average volume, plus both are up over 6%, which FSLR isn't risky enough. I'd take that trade, but SPWR up 9% in one day with lower volume, too risky to take. But overall, the ETF TAN, the Guggenheim Solar Exchange Traded Fund, looks great. It's putting in a pocket pivot point buy signal, and I'm only going to risk 6%. And if I get really, 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 really risky, 8% if I'm wrong. Whereas with SPWR at max, if I would wait, I'd be risking up to 16%. So I'll go ahead and put 2% in the risk account, 2% in the non-risk account in TAN. And if you know SPWR and FSLR are any indications, TAN should continue higher. So I'll go ahead and play the exchange traded fund side of things when it comes to these solar stocks. And then with all these IPOs breaking out, we actually have an ad signal to a stock that we're already long, LOCK. Now, the goal here, whenever I first went long here, was to hopefully have LOCK continue to build sideways 4 or 5 days and then break out. However, the very next day after our initial position, it broke out. And it was on stronger volume. Pattern looked great, so we added to it again. What I thought would happen is that as this market would go along, it would keep its max green bop, hopefully base out, and then break out with max green bop and or green bop. Instead, the market decided to act funny. We lost green bop, and it even had a down day where it closed below the 10-day moving average on strong volume. And since we had a heavier position than normal, that means that it becomes a 25% sell with the heavier volume closed below the 10-day moving average once our position starts to get over 5%, which it is. So we got cut out of some of it, which was not supposed to happen. And then instead of keeping green bop, it decided to go to yellow bop. However, today it's re-breaking out, and this time green bop has come back. I wish it would have exploded higher like volume did. Like, look at how much above average volume is on today's breakout with that nice price move. But look at bop. Still, the good news is that after getting to yellow and then slowly decaying every day, bop is green again, and this bop level is higher than its previous last bop level on June the 3rd. So that's good to see. The trend is back in the right direction for LOCK. It's a nice breakout. If we would have seen a higher surge in green bop here along with that volume and price action, there is no doubt in my mind that I would want to go 5% in both the risk and non-risk account. However, since bop did not surge to a much heavier green, it's going to be 5% risk account, only 4% non-risk account. What if it was max green bop, and what if we would have kept max green bop on the entire way sideways? Then seriously, I would have looked at going 7.5%, possibly 10%, 7.5%. If we could have kept max green bop during that entire base, the lower volume, and then had today's signal, yes, indeed, it probably would have been a 10%, 7.5% position, looking at it more so as a fresh new long rather than our third ad. And then on top of that, another lesson was learned. Besides the TTS fiasco, I mean, let's just once again study the price, volume, and bop move this day right off the 50-day moving average in a stock that was trending beautifully above the 50-day moving average with excellent intraday price action and beautiful green all within the chart, just so we know to never ever pass on this kind of signal again if it ever does come with a sell signal with the top indexes above the 50-day moving average. So as you can see, TTS is doing well. That then brings us to another T stock, TNGO. What's the lesson learned here? Once again, volume on this day, so TNGO once again finding itself off the lows. Nice tight price action. You look at a weekly chart pattern, you can see by looking at the price bars, excellent tight weekly action with intraday tails. Now we start to rally off the lows on very strong volume. We start to get green bop. We start to get steady green bop. Now all of a sudden we have this huge huge volume day, where bop goes from very, very strong green to max green bop on the bottom. On top of that, volume surges. I believe just by looking at that, we're looking at right around 500% to 1,000% surge in volume on the day. You get a 500 to 1,000% surge in volume on the day with bop going from strong green to max green in an overall pattern that's clearly under accumulation off the lows. You could probably have started a starter position at 2 and 2% here. Hindsight. Now, 2 days following that, I thought it was a wise decision of mine not purchasing this stock because the low a day is 1469. Clearly, if 1454 is a close below that, which means no matter what, I would have been selling half of my position. However, looking closely, you can see that despite the move below the low a day, it still was above the 1451 gap up, basically open, 1452. And it was above the 10-day moving average. It wasn't even closing below the 10-day moving average and never did. So now looking in hindsight, clearly this day could have easily been a new position day for TNGO with a green to very strong green to a max green bop surge with a bar which basically you open at the low a day and close at the high day with a 500 to 1,000% surge in volume. You never break the lows of the gap up day of 1451 on the pullback. Yeah, it's totally, that should have been a 2% position that day. Look at the bop, look at the volume, look at what it does, look at the volume, look at the bop surge, and then look at what happened today. Now we take that along with TTS, and once again, we look at the volume, we look at the bop, and we look at the price surge, of what it's doing overall in a trending up position in a market that's in a QE environment. So we know that we're going to want to go up more than we want to go lower. And TNGO and TTS become some big whoops moments, and the two biggest whoops moments since 2011. However, TNGO can be forgiven. It was deep in a base, as you can see here, was nowhere near like the old highs. And on top of that, the 50-day moving average was below the 200-day moving average. It's not like this move right here is coming from a longer base. So I can definitely forgive myself for TNGO, even though it was up 6% today. And now I can start to wait for TNGO to hopefully build another consolidation, hopefully do another surge while keeping this max green bop. TTS, on the other hand, there is no forgiving myself on that. That's just a mess up. But still, another lesson to learn and to hopefully make us more profitable in the future, because as you can see, TTS and TNGO continue to do very well. TNGO now up 6% since that buy point. TTS in 3 days is now up almost 15%.